Life and Annuity Marketing Director here at Western Marketing. Wanted to thank everybody for taking time out of their schedules. Today we've got David Royer with Guaranty Income Life. We're going to be talking about some of their unique and certainly very relevant products in today's market. I'm sure some of you folks on this call probably sell fixed index annuities. One thing I can tell you is that fixed index annuities are not part of Guaranty Income Life's current portfolio. They have multi-year guarantee annuities and their Annuicare product, but however, these are not affected by the Department of Labor because they are not index products. So there definitely is more of a streamlined process in moving forward with these products. And you know, obviously we all had the information yesterday that the DOL will not be extending the delay. June 9th is the applicability date, but really no bite for the DOL until January 1st of 2018. We won't see any changes. And so if you folks do have questions about that, feel free to give me a call. But good thing to know is that, like I said, these will not be touched by the Department of Labor or the Vice or any sort of conflicts there within. So certainly that's my introduction here. Just a couple housekeeping notes. If you do want to ask questions, feel free to use the O2 webinar. You can type in your question in there. We'll go ahead and get that answered at the end of the call. And then this is being recorded, and I'll be sending an email out here as I typically do later today or tomorrow with details on how to sign up with Guaranty Income Life and more information about their products. But with that, I'll kind of hand things over to David here.
Hey, thank you, Nick. I appreciate the opportunity of speaking with you folks, and I want to thank all of you for taking your time to be on today. This webinar is scheduled to last for approximately 30 minutes. And as Nick said, it is going to be recorded if you want to record, and you can access that through Western Marketing. But before I get started, I just wanted to say that at Guaranty Income, we are very pleased to have this relationship with Western Marketing. We know they're one of the premier marketing companies in the United States, and really enjoy working with the great folks up there with you, Nick. Thank you. So anyhow, with that, I'm going to get started. We're going to talk about three very unique products, and I think what you're going to like about the products I'm going to talk about, they don't take away from products that you're currently selling. These are additional products that could generate additional business in your practice. And the first product we're going to talk about is Annuicare, which is simply an annuity that also leverages long-term care. So for example, if somebody deposits $100,000 into the Annuicare annuity, they will have immediately $300,000 to cover long-term care expenses, and all of the claims are paid income tax-free. The second product we're going to talk about is our 4-year multi-year guarantee, or 4-year MYGA. And the charm in this product is issued all the way through age 100. So that market between 91 and 100, you now have annuities to sell. And one of the reasons we decided to be in that age bracket, it's really two reasons. Most people in their 90s don't believe they can get an annuity. They've been told all of their lives that you can't buy that annuity past age 85. Well, we've changed that landscape. And the other issue is, there are many annuities today that are maturing, and they mature at, like, say, age 90, 91, 92, 95. But when the annuity hits its maturity date, the annuitant literally gets thrown out of the annuity. They get a very polite letter from the annuity company saying, hey, we appreciate your business. Congratulations, your annuity's matured. Where can we send the check and the 1099? So they get hit with a big tax bill. So having an annuity that they can buy through age 100 can keep that money tax deferred. And the last product we're going to talk about is the product that Guaranty Income currently is selling the most of. It's a 6-year multi-year guarantee. The interest rate is 3.25%, 3.25%, and that's guaranteed for 6 years. And I can assure you, we've done our homework and we've checked the competition. That 3.25% will compete with all 5, 6, 7, and 8-year MYGAs. It is the best rate out there. And also, as Nick mentioned, currently Guaranty Income's products do not fall under Vice. So as the fiduciary rule kind of comes into whatever shape or form it's going to be, and nobody really knows for sure, you can be very safe with these type of products, not just now, but going forward. So let's get started. I want to talk first about something kind of a negative, and it's America's long-term care crises. A number of things have happened in the traditional long-term care space, and frankly, none of them are good things. First of all, interest rates have remained low. Well, the interest that an insurance company earns on their investments is one of the factors that's used to determine what they're going to charge, how much is their premium. So when interest rates are low, the premiums naturally come up. And at the same time, nursing home costs have been soaring. It was estimated last year the average stay, and this is in a semi-private room in this country, last year, 1 year stay tipped over $90,000. Also, we know that people are living longer, and the longer people live, the more likely they are to have a long-term care incident, that putting additional strain on an already very strained system. And as a result of all this, we've seen long-term care premiums increasing. As a matter of fact, for a long-term care premium to double is not unusual. We've seen some severe tightening in underwriting. As a matter of fact, somebody who would have easily qualified for long-term care, say 10 years ago, that same person, same age, same health today, may find themselves rated up or even a decline. And we've also seen not just many, I used to say many, now I'm going to say the majority of traditional long-term care insurers have exited the market. And I'll give you an example. Back in 2002, 102 companies issued over $1 billion of new premium in the traditional long-term care space. And if you fast forward that 10 years to the year 2012, that number was cut in half, and the number of insuring companies was 24. Today, I cannot name 8 companies that are still selling traditional long-term care. Now, that may sound like a negative, but actually it could be a positive in your practice, and here's why. Anytime demand exceeds supply, you can generate commerce in your practice immediately. And we have that very situation. We have 10,000 boomers turning 65 every day, concerned about the cost of long-term care, trying to figure out ways to protect their assets from catastrophic illness. And at the same time, we have fewer and fewer insurance companies that are issuing traditional long-term care at ever-increasing rates. So that pretty much spells out the problem. The solution, we believe at a Guaranty Income, is going to be annuity-based long-term care. Now, we were the first company to introduce annuity-based long-term care in the independent distribution channel, and that was back in 1999. So we have over 18 years of experience with this product, and I want to point out we have never increased the cost of the rider, so we have rate stability. So Annuicare, again, is simply an annuity that provides long-term care. Now, there are two. Actually, the Annuicare rider can be put on any of the Guaranty Income annuities, so all of the annuities I'm talking about today, you can add this rider. The two most common is Annuicare 10, that's on a 10-year chassis or 10-year surrender period. It is issued all the way through age 79, and the current rate is 3.25%. So 3.25%, I think you'll agree, is an excellent rate in today's interest rate environment. Now, for your older clients, we have Annuicare 7. That can be issued all the way through age 85. And the current rate is 3%. What I want to point out, at Guaranty Income, we use what's called a portfolio-style renewal rate. And that simply means as interest rates in general trend up, our renewal rates will trend up as well. And conversely, if interest rates trend down, it's unlikely, but it could happen, our renewal rates will trend down. But we think right now, interest rates are poised to increase. And the point I wanted to make, these rates you're looking at right now, 3.25% and 3%, they're not stuck at these rates. So if 3 or 4 or 5 years from now the average rate out there is 4 or 5%, we're going to be right in there with them because we will adjust this rate as interest rates trend up. Now, I want to share a quick sales concept with you. And before I do, I want to point out this is not something that we cooked up at the boardroom at Guaranty Income Life. This is actually a sales technique that's being used by the #1 Annuicare producer in the United States. When we saw this particular individual submitting 3 and in some weeks 4 and in some weeks 5 Annuicare cases, I felt compelled to call him and say, well, Fritz, how are you doing this? And here's what he told me. Whether he's with a client one-on-one or whether he's doing a workshop, some of you may be doing consumer workshops, he always adds this in. And he walks through it like this. And what he told me is sometimes asking the right questions in the right sequence will give you more sales progress and create more interest than reams of paper with columns of numbers on them. So this is his approach. He asks his audience or the individual, what if I could show you a way to protect your assets from the high cost of long-term care? And while doing so, you could maintain complete control of that asset. Now, if you should need care, you will receive up to 3 times that account value to pay for the care. So in other words, if your asset's $100,000, you'll receive up to $300,000 to pay for that care. And here's the best part. If care is not needed, this money can be passed on to your beneficiaries, 100% of your deposit, plus net interest. Ladies and gentlemen, what if I could do that and you had to pay no out-of-pocket premium? Would you be interested in having a closer look at this approach to covering your long-term care needs? And when he began to do that in his workshops, he was typically making appointments with about 20% right there at the workshop. He's well over 60% now because these questions create intrigue, and intrigue creates appointments. So I wanted to share that with you. So anyhow, Annuicare is a really very simple product. I also like to compare it to a bank. Let's assume that you've got a client that's their net worth may be $600,000 or $700,000 or $800,000, and they decide to carve out some money in case either he or she incurs long-term care expenses. And let's say they decided to carve out $200,000. Now they're standing on the street. They have the $200,000 in a big black bag, obviously not safe, but they're there for a good reason. They're going to put the money in a bank because they want to keep it safe. Well, the bank over here on the left has a sign in the window that says, deposit your money here. We'll keep it safe. We'll pay you a fair rate of return. Should you become ill or injured and incur long-term care expenses, you can come down to the bank. You may have to pay a little interest penalty, but for the most part, you can withdraw all of your money to pay for those long-term care needs. Well, what I just described is a bank CD or money market account. Now, there's a bank just to the right of it. It has a similar but slightly different sign in the window. It says, deposit your money here. It'll be safe. You'll get a fair rate of return. Same thing. However, should you become ill or injured or have cognitive impairment and incur long-term care expenses, you can come down to this bank and not just withdraw the $200,000 that you deposited, but over a 6-year period, you can withdraw 3 times that much, in this case, $600,000 to cover your long-term care expenses. And folks, that would generate $100,000 per year for 6 years, income tax-free. Excuse me. So let me ask you this question. If you were that person trying to find a hedge against the high cost of long-term care, and that was your $200,000, which one of these banks would be more attractive? The one that gives you your money back, or the one that will give you your money back 3 times? So that's just another way to describe Annuicare. So this brings to the question, back in 1969, we chose to introduce this product into the independent distribution channel. Why did we do that? Why did we develop an annuity that also has long-term care benefits? Well, it's because we studied the demographics, and what we learned is that 85% of Americans aged 65 and older do not have long-term care insurance. Now, if you drop that demographic down to age 60, that number goes up to 90%, which simply means 9 out of 10 people that you talk to don't own long-term care insurance. So we dug a little deeper. We wanted to find out why is it that 9 out of 10 Americans, particularly senior Americans, have chosen not to own long-term care insurance. And what we learned and what they told us is, in their view, it's expensive, and because of these big premium increases, it's likely to get more expensive and at some point even unaffordable. They also pointed out that underwriting's become too rigorous, it's too lengthy, it's harder to qualify than it used to be. And those are both good reasons, but we learned the real reason. And what we found out is that seniors are reluctant to pay for something they may never use. So there's a consumer mentality, or better said, there's a consumer mindset that has to be overcome. And the mindset is this: long-term care is a use it or lose it proposition. Simply stating, if I don't use my benefits, I've lost my premium. If for me and my wife it costs $5,000 a year, even without rate increases in 10 years, that's $50,000. If we then pass away without using our long-term care benefit, that $50,000 now belongs to the insurance company and does not get passed on to our heirs. So that's pretty much the consumer mindset. It's a use it or lose it kind of proposition. And I want to point out, we have to overcome that mindset to be successful in helping people get the long-term care coverage that they need. And here's how Annuicare solves that problem. If your clients don't need to use their long-term care benefits, they can get their entire premium back plus net interest. Or if they pass away without using their long-term care benefits, 100% of their annuity value plus net interest will be passed on to their heirs. So what have we accomplished with this? We've taken that consumer mindset from that use it or lose it mentality, and we've changed it to this: I have long-term care protection if I need it, and I get my money back if I don't. So we've changed it from a use it or lose it to a win-win mentality. And that's why, ladies and gentlemen, just so you know, last year was the first year that asset-based long-term care eclipsed traditional long-term care sales, and it eclipsed it by a great margin. This year, we believe asset-based long-term care will represent somewhere between 75 and 80% of total long-term care sales. So this is the way the market's going. So I want to share the concept with you, and this is something we can make as complicated as we want or as simple as we choose. And because Annuicare is such a simple product, we're going to take the simple approach. So, excuse me, the simplicity begins right here. The numbers I'm about to share with you apply to both male or female. So what does that tell you? Our rates are not gender distinct. Typically, the female cost for long-term care is higher than the male. At Guarantee Income, they're the same. Also, it applies to all ages. So let's go back to this individual that decided to deposit $200,000 into the Annuicare annuity. The Annuicare rider will immediately reserve an additional $400,000 of long-term care benefits. So if you add the two together, the $200,000 deposit plus the additional $400,000 provided by the Annuicare rider, you'll see that they've leveraged their $200,000 deposit into a $600,000 total long-term care benefit. So, and I want to show you how the benefits are paid. It's going to be paid from the top down. In other words, when they go on claim, they'll spend their annuity first, and that will be spent without any penalty. And then for the next 4 years, the benefits will be paid from the Annuicare rider for a total of 6 years. Now, don't see this as a negative that the benefits are paid out of their annuity first, because remember, these people are already self-insured. So the benefits are going to be paid first, in the middle, and last out of their own money. So this way we build a $400,000 corridor of safety between long-term care expenses and the bulk of their retirement savings. But in any event, if you take the $600,000 benefit, you divide it by the 6-year benefit period, that generates $100,000 a year of long-term care tax-free, or long-term care benefits tax-free, for a total of 6 years. So that's how simple Annuicare is. Now I want to spend a moment talking about our underwriting. And I know this is everybody's favorite subject, and I think you're going to like our approach to underwriting. The entire process is a telephone or face-to-face interview conducted by a registered nurse. Now, we use the services of the Long-Term Care Group. They are the biggest third-party underwriter of long-term care in the country. They have registered nurses that can get out to the Badlands of North Dakota in the winter if need be. But anyhow, through age 69, the entire underwriting process is an interview by a registered nurse. It's a telephone interview. If they're 70 or over, that same interview is conducted face-to-face. And what will happen on that interview, they're going to find out what medications they're taking, what conditions they're taking them for. They're going to look for things like, are they using a walker? Can they climb a flight of stairs? Do they use a wheelchair? Do they use a 4-prong cane? Are they on oxygen? The obvious things. And they're going to ask them what medications they're taking, what conditions they're taking them for. These either telephone or face-to-face interviews last approximately 35 minutes. They're also going to give them a brief cognitive impairment test, and that's it. I think what you're going to like most about our underwriting is what we don't do. There is not going to be a medical exam. There's not going to be any lab work. There's not going to be any attending physician statements ordered. There'll be no medical records ordered. All of the things that slow down underwriting of an underwritten product, we have eliminated all of those and replaced it with either the telephone or face-to-face interview. Also, you're never going to have to go out to your client and apologize by saying, your 65-year-old client, by saying, well, the underwriter's telling us that you're just not in average health for somebody your age, and consequently, we're going to charge you a higher premium. Nobody likes to hear that, and nobody likes to say that, and that won't happen with Annuicare. There are no substandard ratings. They either qualify or they don't. Incidentally, we are declining less than 20%, which means our issue rate's about 80%, as opposed to traditional long-term care where it's closer to a 50% decline rate. Also, because of this underwriting style, this quick underwriting style, excuse me, you can expect to get a very quick response. It's typically going to be 3 business days after the telephone or face-to-face interview. We are going to give you an underwriting decision. Now, there's going to be times that you're going to be in the field, you're going to be talking with a prospect about this product, and they're going to have a number of different medications and a number of little things that we're not familiar with. And I don't know about you, I cannot pronounce half of the names of the prescription drugs, and I cannot spell any of them. So that you don't have to go through the all of the motions of filling out the complete application kit and frustrating your client because they're not going to qualify, we've developed the Annuicare Rapid Response Form, where you'll list their medications, the dosage, why they're taking them. There's a few other simple questions. It's 5 minutes to fill out this form. And you'll notice at the bottom it doesn't have to be signed by the annuitant or insured, which means you can develop this information on the phone. And once you've developed it, you fax this to this number right up here, 225-343-1747. And typically within less than 24 hours, we're going to get back to you and let you know, okay, we think we can underwrite this, go ahead and take the application, or don't bother. This person doesn't qualify because of this particular medication or whatever. So it saves you a lot of frustration and time, and you can acquire these rapid response forms from the great people at Western Marketing. Excuse me, I keep clearing my throat. This is grass pollen season in Dallas, so I'm suffering just a little bit. I apologize for the distraction. What I'm going to do right now is I'm going to compare the 4 companies that sell annuity-based long-term care in the independent distribution channel. So there are only 4 companies. Guaranty Income's over here at the left. This product's called Annuicare 2. That's the One America product. This one's 4Care. It's sold by Forethought, and then there's the Lincoln product. And we're going to compare them in 2 categories. At the top, how much benefit do you get per dollar of premium? And at the bottom, what are those future cash values going to look like? Because a large percentage of these people will never use the benefit. This then becomes the money that gets passed on to their heirs. We're going to use a male 65 who deposits $100,000. So immediately they're going to have $300,000 of long-term care coverage with Guaranty Income. By the end of the first year, that long-term care benefit will have increased to $307,000. That's because of interest earned. Excuse me there a second. Okay. My screen was jumping around. My apologies. So yeah, it's going to be $307,000 with Guaranty Income. That's the long-term care benefit, and the lowest of the 4 companies is going to be State Life at $252,000. Pretty substantial difference. 4Care or Forethought and Lincoln are going to fall in between. If you go out 10 years, now your client's age 75, because of interest earned, the total long-term care benefit with the Annuicare will have grown to $376,000. Lowest again is State Life at $273,000. Forethought and Lincoln falling somewhere in between. Now, if we go out 20 years, now your client's age 85. Now, this is kind of the sweet spot. This is where we begin to see these long-term care claims come in. The total benefit will have grown from its original $300,000. It will have grown to $471,000. This again is because the annuity earned interest, and it's always going to be 3 times the annuity value. The lowest of the 4 again is State Life at $298,000, and you'll see that Forethought and Lincoln fall in between. The closest to us is Lincoln at $346,000 compared to $471,000. That's a difference of about $115,000 more long-term care benefit. So what I wanted to prove to you with the top part of this chart is that the Annuicare product is going to generate more long-term care benefit than the only other three competitors that sell these products in the independent distribution channel. Now I want to drop down to future cash values. At the end of 10 years, assuming no interest rate increase, assuming current rates, the annuity value would have grown to $124,000. State Life, again, the lowest at $104,000. That's a difference of $20,000 in just 10 years. And you can see that Forethought and Lincoln are in between, but they're actually closer to State Life than they are Guaranty Income's Annuicare. At the end of 20 years, the total cash value at current interest rates will have grown to $157,000. State Life, again, the lowest at $108,000, and then Forethought and Lincoln falling in somewhere in between. So what I wanted to prove with this chart is that Annuicare, number one, there's only 4 companies that sell this type of annuity-based long-term care in the independent distribution channel. And of the four companies, Annuicare is clearly head and shoulders above the competition. The reason I went through this exercise is very simple. When you recommend Annuicare to your clients and prospects, I want you to be 100% confident that you're doing so because it is the best in class. So let's move on. One of the best ways to sell Annuicare is to use the illustration software. And this is kind of what an illustration looks like. And again, here we're using a male, age 65, deposits $100,000 of premium. That immediately generates $300,000 of long-term care coverage. If you go down to the accumulation value at the end of 5 years, that $100,000 deposit will have grown to $112,000. If you triple that, their total long-term care benefits now grown to $336,000. At the end of 10 years, the accumulation value would have grown to $125,000. That brings the long-term care benefit up to $376,000. Let's go all the way down to 20 years. The accumulation value at current rates, and this is assuming no increase in interest rates or decrease, will have grown to $157,000. Total long-term care benefit, $471,000. And incidentally, not only is this the easiest way to sell it is to show them simple numbers, also it's a requirement that a signed illustration comes in with the application. So you will wind up using the Annuicare software. And again, the folks at Western Marketing can run illustrations for you or show you how to download the software if you'd like to run your own. The Annuicare commission on Annuicare 10, this is what we sell the most of, is 7.5% of the premium, ages 0 to 74, and 5.5%. Like most annuities have a commission reduction at age 75, so it's 5.5%, ages 75 to age 79. So folks, let me back up a second. So that's Annuicare, and again, this is being recorded. The folks at Western Marketing write a lot of this product. They know it very well. They can supply you with a number of things, one being the Annuicare marketing guide that will give you the list of medications we won't accept or medical conditions we won't accept. They can get brochures to you. They can get application kits, everything you need to do business. So now I want to move into product number 2. So we're done with Annuicare for the time being. And I want to talk about a product we call Guaranty 4, which is a 4-year, multi-year guarantee annuity issued through age 100. And we developed this product to serve the emerging, and I guess I should say, senior market. So what we're really talking about here essentially is ages 85 to 100. And the reason we targeted this market is because the insurance and the annuity industry has not targeted this market. To my knowledge, we are the only company in America that is in the independent distribution channel that will issue annuity all the way to age 100. Now, why did we do this? Well, we learned from the Department of Health and Human Services in 2015 in their report, they pointed out that there was approximately 6.8 million individuals in this country over the age of 85. And you know, folks, most of these people don't believe they can get an annuity because they have been told all of their lives, you better buy it before age 80 or before age 85, because after that, annuities aren't offered. Well, that's not the case anymore. But anyhow, the Department of Health and Human Services has estimated that by the year 2030, that number will go up by about 50%, and there'll be 9.6 million people in this country over the age of 85. And then I found an article in the New York Times. This may not be my or your favorite newspaper, but the article was really very good. I'm just going to read an excerpt from it right over here. The 85 and over United States population, the fastest growing group in the country, is projected to rise from 7 million today to 19 million by the year 2050. So what their study took into account is the baby boomers who are going to survive beyond age 85, really beefing up that marketplace between 85 and age 100. So the market's really very simple. One of the big drivers of this particular product is nothing more than advisor and consumer awareness. You know, a lot of folks that are in their 90s that want their money in a safe place, they're in money markets and they're in CDs. They may be making 1.25%. In a money market, maybe they're making 20 or 30 basis points. If they knew that they could get a guaranteed rate of 2.6% and tax deferred, this money would move quite easily. So a lot of it's just consumer awareness. The other driver of this product is maturing annuities. See, when annuities are issued, they have a maturity date. Now, what that maturity date means is at the maturity date, the annuity is over. And what will happen is they're going to get notified by the company that, hey, congratulations, you met your maturity date, and they're going to lose tax deferral. They literally are kicked out of the annuity. They lose tax deferral, and they're going to have to pay tax on the gain. Now, if you think about this for a moment, if somebody keeps an annuity until age 92 or so, whatever the maturity date is, they probably never planned to spend that money, and they most certainly do not want to pay the tax on the gain. So most of these folks would like to keep it into an annuity. Unfortunately, most annuity companies do not issue beyond age 85, and there's a couple of companies now that issue through age 90, but we're the only company that's issuing between ages 91 and 100, and this is when these annuities are maturing. So this gives some tax relief to these individuals that have loyally stayed with their annuity for many years. They have this low cost basis. They have a lot of gain. We offer them continued tax deferral. So here's the opportunity. We've developed a competitive 4-year MYGA. It's issued through age 100, and Guarantee 4 can provide an additional 10 or more years of tax deferral. So let me give you an example. Let's say somebody's annuity matures at age 90, and they're going to be kicked out of the annuity. They can do a 1035 into our Guarantee 4 product, and they're going to get 2.6% guaranteed for 4 years. Now, at the end of the 4 years, they can choose to keep it for another 6. They can keep it for a total of 10. But if the new money rate, let's say it's 3.5% at the end of 4 years, they have the right to buy right back in. And incidentally, if it's out of the surrender period and they opt to buy back into that 4-year MYGA at the higher rate, we pay the commission again. So a 100-year-old annuitant, we only have one right now, but we have a lot of them in their 90s, but one that's age 100, can have 10 more years of tax deferral, which means they can keep that money tax deferred to age 110. So we believe the Guarantee 4 is really going to be a good option for maintaining client relationships and helping them continue tax deferral on the gain. And I also want to point out, because we are already experiencing this, there's a built-in secondary sale. Realistically, when you write an annuity on a 92 or 95-year-old, it's just a matter of time before we're going to have a death claim, and you will know who the beneficiaries are, and you can counsel them, and that could become your secondary sale. Because we like this product and this market so much, we've decided to, we've come up with 2 enhancements. In the past, through age 89, your limit was $300,000 without home office approval. We've increased that to $600,000. Ages 90 through 100, the maximum premium was $100,000 without home office approval, and we've doubled that to $200,000. And larger annuity premiums can be accepted with home office approval. Now, I'm going to show you how you get that home office approval here in just a moment. Let me say this. We are approving very close to 100% of the larger amounts. We actually approved $1.6 million on a 92-year-old. That was about 45 days ago. We're accepting cases of 500,000, 600,000, 700,000 for people in their 90s. So don't let that home office approval thing bother. We just want to know a little bit about the annuitant before we say yes. We also increased the interest rate. It was 2.4%, and at that time, that was the highest 4-year MYGA rate in the country. We've increased it to 2.6%. We want to be exceptionally and extra fair to that senior market. It's for suitability purposes. We want to give them a very competitive rate. So those are the 2 enhancements. Now, when you do come across a case that's, if you look up, this is the large case questionnaire. Let's say it's over 600,000 through age 89 or over 200,000 ages 90 to 100. Just complete this form, fax it into the home office. I can't remember the last time we said no. And again, this is a form where we're just getting general information, nothing specific, and it doesn't require the annuitant's signature. So again, you can just complete this form quickly. You can develop the information on the phone, fax it to this number, 225-343-1747, and typically within hours, we're going to give you an approval. So let's move on. Prospects. Where do you find prospects for that 85 to 100 market? Well, it could be parents of your current annuity clients. I don't know if you've ever experienced this. I have in my career. I'm working with maybe a 65 or a 70-year-old to complete the transaction, and they ask me, what can you do for my 95-year-old mom? Well, the answer used to be, Well, she wants to keep her money safe. She should just put it in the bank. Today, the answer is your mom can qualify for a tax-deferred annuity, and we can guarantee 2.6% for 4 years. Your current annuity clients, those of you that have been in the business 15 or 20 years, you're writing people in their 70s, they're now going into their 90s, and they're going to be hitting their maturity dates, and now you've got a place to 1035 that money. And that consumer awareness, when I can't stress this enough, most people in their 90s don't know they can qualify for an annuity. They think they're ineligible because of their age. So sometimes just making the consumer aware, say, look, if you have your money in the bank, if you're in a CD or money market account, wouldn't you be happier with a 4-year guarantee of 2.6% and tax deferred? And finally, anybody you know with aging parents, it's interesting, if you know people that are in their 60s or middle 60s, somewhere in that age range, if they have living parents, they're very likely to be somewhere between 85 and 95. So just letting them know that, hey, did you know your mom and dad, I don't know where they save their money, but there's a company now that will issue an annuity all the way through age 100, 2.6% guarantee. Folks, the commission on our 4-year guaranteed annuity that's issued through age 100 is 1.6% through age 79 and 80 basis points age 80 through 100. So just under 1%. And again, that's in a market area where you really don't have any competition. This is what the Guarantee 4 brochure looks like. You'll notice at the top, the first thing we're promoting is it's issued through age 100, and it has a 4-year rate guarantee. So for those who want guarantees, and particularly for those senior clients that want to continue tax deferral, we offer Guarantee 4, 2.6%. It's a very competitive rate on a 4-year MYGA, issued all the way through age 100. So now I'm going to go into our second MYGA, and this is the one we sell the most of, and I'm definitely saving the best for last. This one's called Guarantee 6. It's a 6-year MYGA. The rate is 3.25%, 3.25%, guaranteed for 6 years. Folks, that is the best rate out there for an annuity that has liquidity. So, and it's a 3.25% guaranteed for 6 years, and it will easily compete with any 5, 6, 7, or 8-year MYGA. It is clearly the best rate in town. And it has liquidity. It pays full accumulation value at death. There's some companies out there today that might be close to 3.25%, but it's a 5-year payout. It's not full accumulation value, so you have to buy the liquidity. Also, interest can be received monthly after 30 days or cumulative at any time. It is RMD friendly, so we do accept IRAs, and the issue limit on this product is age 79. So 6-year MYGA, 3.25%, issued through age 79. Folks, I'm not going to spend a lot of time talking about this because the 3.25% speaks for itself. That is the best rate out there. The producer compensation on this is 2% all the way through age 79. We are not reducing the commission at age 74 or 75 like most annuity carriers do. So it's Guarantee 6, 3.25%, issued through age 79. It is clearly the best rate in the industry. Folks, this is the Guarantee 6 brochure. Again, you can get this from the folks at Western Marketing. It's a very simple 4-pager, just walks through the advantages of tax deferral, etc. I'm going to close with this. Guarantee Income has been around since 1926, and our reputation has been built on 3 things, and that is service, experience, and innovation. When you call our home office, you're going to be in for a very pleasant surprise. Somebody's actually going to answer the phone and say Guarantee Income Life. You get to talk to real people. You will never be in your car trying to punch in the first 3 letters of somebody's last name or working your way through a phone tree while you're in a school zone. And because somebody actually answers the phone, they can route your call to the person that can handle your request. Because of that, most service requests get handled with 1 phone call. And ladies and gentlemen, at Guarantee Income, we believe that we fill the niches, we build innovative products to fit your clients' needs today. So with that, I want to thank you very much for being on today, and I'd like to turn it back over to Nick at Western Marketing.
Well, great. Thanks so much, David. A great presentation. I think most folks on the webinar can see the value that these products deliver, and certainly very much stand out in their own respective fields. So that Annuicare product is certainly a very, very popular product. I know we've been talking a lot about that to a lot of different folks. If you guys need specific illustrations, you have somebody that you're talking to right now that may be a prospect for this, give us a call. We can get you illustrations and what you need, and certainly show you how that would look over a certain period of time. These long-term care alternatives are becoming more and more popular. As David said earlier, certainly we have seen a number of the true long-term care carriers drop out of the market, and so these hybrids are certainly gaining popularity and traction, and their multi-year guaranteed annuities being very, very competitive as well. One quick question: is this product available in Pennsylvania?
Yeah, it is not. We are currently filing in Pennsylvania. We are pretty much from Pennsylvania over to New Jersey and north, that whole northeastern quadrant. We do not have product in those states, but we are filing as we speak. So sometimes this filing process may take 6 to 8 months, but we hope going into 2018 we're going to be in all those key states. But we're in all the major senior states. Matter of fact, if you look at the map of the states we're in, it kind of looks like the map of the Republicans, you know, the red and blue Republicans versus Democrats. It appears like we're everywhere, but except that northeastern quadrant.
Okay, great. And then another question: AM Best rating for Guaranty Income Life.
AM Best has rated Guaranty Income a B+. But I want to point out something. AM Best uses what's called the BCAR rating system, CAR standing for Capital Adjusted Ratios. And our BCAR score on AM Best's own BCAR rating is high enough for us to be an A+ company. So are our ratings going to go up? Yes, they are, but they're not going to go up all at once. But they will be kind of, you know how AM Best works. They take you down quickly, they baby step you back up. So we hope to go to B++ on our next meeting with AM Best, and from there we'll go into the A category.
Great. All right. Another quick question that came in here: would you recommend the Guarantee 4 to a risk-averse 61-year-old?
Well, I would, because of the short term, because it's just a 4-year surrender period. I think, you know, if I were the 61-year-old, I would go with the Guarantee 6, because to me the 3 1/4 is better than 2.6. But if I believe that interest rates were going to jump quickly, I might go with that shorter 4-year chassis, just so that I could get into the higher rates sooner. But there is no risk in any of these multi-year guarantees.
Absolutely. Available in Florida is the I guess all products. It didn't specify, but these products available in Florida.
Absolutely.
All righty. Well, you heard it here first, folks. Those products are available in Florida. Like I said beforehand, if you need illustrations, if you want to see some numbers, how that really stacks up over time on the Annuicare product, the Guarantee 4, Guarantee 6 is a pretty straightforward product, but the Annuicare certainly has a few more bells and whistles, and certainly a very solid product. David, thank you very much for this great presentation. Western Marketing has been a long-time partner with Guaranty Income Life. We love their products, love working with David and the crew there at Guaranty Income Life. Certainly give us a call. Numbers up on the screen there, 800-852-7152. If you have questions about this or anything else, you can contact me, Nick Randall, or anybody else in our life and annuity team, Andy, Amanda, Chris, Kyle. We can all certainly help you out. But I want to thank everybody for taking time out of their schedules here this Wednesday morning. Thanks once again, and hope to see everybody on the next webinar.